this Monday. I'm Toni Valliere with Verified Investing. Here's what's making headlines today. Amazon and iRobot call off their planned acquisition, stating there was no path to regulatory approval, sending iRobot shares down sharply. iRobot also says it will be laying off around 350 employees. FanDuel parent Flutter starts trading on the New York Stock Exchange, looking to give DraftKings some competition. AMD stock gets a boost after Elon Musk says he would buy its chips to power AI efforts at Tesla. And whether you love her or you're annoyed by her appearances at football games, Taylor Swift is big money for the NFL and the Kansas City Chiefs to the tune of an estimated $331 million so far. That's according to Apex Marketing Group. Let's take a look at where the market stands just minutes before the closing bell. The Dow Jones now up more than 0.5%, 212 points at this hour. The NASDAQ up 158 points, up more than 1%. The S&P 500 up 38 points, 0.78%. Oil down just slightly. We've got gold up slightly, and Bitcoin is up quite a bit, 1,075 points up, more than 2.5%. On this Monday afternoon, we've got Chief Market Strategist Gareth Soloway joining me on this Monday with a look at the day's trading, and that's exactly what I wanted to get to. The S&P 500 has been consistently reaching all-time highs. Of course, I watched the game plan this morning before the opening bell, and you say that it's reaching these highs because it's driven by a very small sector, and that could be seen as a cautionary tale. Explain.
Yeah, so generally you want broad-based buying, right? Not just one sector that's so dominant, which is these really $6 trillion companies now, right? Not, Tesla's kind of out of it at this point. They're trying to figure themselves out. But these companies, they are such a behemoth within the NASDAQ as well as the S&P 500 that as they shoot up, it's carrying the indices with it. So that's the kicker, is that if you don't see it in the other, why aren't the other sectors, why are there no other sectors in the market that are at all-time highs if the NASDAQ and the S&P is? And what is that telling us about the economy as a whole? Yeah. Is it just driven by these tech players that are AI driven at this point? And I think that's so interesting. And today you could see right here, right? So this is your S&P intraday chart, 10-minute chart. And very clearly we were following this little channel. And you can see from here, bear with me as I get my drawing tools out here. We always know in the afternoon it doesn't like to behave. But right here, we had these high pivots and then these low pivots right through here. You can even see it there, right through here, and sure enough, later in the day, we've just soared right into that high area again for another nice day. And now the kicker is this, is we are getting very close to 5,000 on the S&P 500. So you've got to think that's hit, whether it's this week with some good earnings from the mega caps, maybe it is. If not, I got to believe that it does get tagged in the next couple days. Couple things to look here at. So this run up, this is a 10-minute chart. So this was late in the day here, this pop right here on the S&P 500. I just want to show you the culprit here. Very clearly, it was the US dollar, right? So if we flip over to the 10-minute chart on the US dollar, notice how you had this late in the day drop here. And we know, again, that inverse relationship, right? When the dollar goes down, markets go up. And just flipping back to that SPY chart again, or the Spider's S&P chart, this is that exact move right there. So this move right here coordinates with the dollar going down that we were just looking at. So that just simply put, this market is very light. The volume today is probably amongst the lightest in the last 12 months. And we're all waiting for the Fed, for mega cap earnings, and even the jobs data. We're going to get the JOLTS data later this week, the non-farm payrolls. And so really it's a light volume market that the dollar is now just controlling. As long as the dollar's falling, this market's going to go higher. So it's interesting stuff.
Kind of just floating by until we get that decision, which comes, they meet Tuesday, we get the decision and the press conference Wednesday. 2:30 is the press conference, but you're going to go live just before 2?
Yeah, I'm going to go live
so
just
watch
before,
for that.
just before 2, 1:55. I'll go live, and I want to kind of go through and look at the chart reaction and see what the markets are doing, see if there's any trading opportunities, in fact, with that. So that should be really fun. Now, you did mention iRobot. That stock has been crushed. I did kind of contemplate today picking up a little bit of this just as a beaten down play, but my problem was if I go to my monthly chart, it's kind of at a point where you just wonder if it can even survive. And I say that because you're now at a point where the market cap is below 400 million, so it's considered a small cap at this point. And again, it's just one of those things where it's a risk-reward assessment. So yes, it's beaten down, but I still was cautious on this. I didn't pick up any yet. I'll keep an eye on it. But I also wonder, iRobot, they make those great vacuum cleaners that go by themselves, right?
Yes, I want
But the
one.
question is AI? I mean, are there other companies that are just going to come in and dominate because they have AI technology now too, and are they going to be left behind with that technology? I don't know, but it's just something that I was looking at. SoFi today, great earnings. The stock did pop up today on the back of that. We got close. Let me bring up the daily chart here. So there was a level that I was watching for, and I talked about in the game plan, and you can see right here, this was a big gap fill. I talked about that would be my level today to short it. But again, look, it didn't quite get there. Came very close, went right there, and then kind of came back in. But either way, that was a good move there. A couple other charts that I'm keeping an eye on here. The Russell. So the Russell I did pick up today in my portfolio with members. And the Russell, essentially, I talked about this in the game plan. This is the small cap. Basically, the 2,000 stocks are made up of smaller stocks than the mega caps. There's no mega caps.
Okay.
And if you look at this bigger chart, we talked about this breakout, right? Classic breakout of the wedge pattern. So you have this down-sloping line and this up-sloping one here. We broke out, we did a classic retrace right to this area, and now it's starting to move up. And the thought process here is that these stocks are going to play catch-up to some of these mega caps, right? So there would be money flow. My expectation is after earnings, Microsoft, Meta, Apple, Amazon, Google, they'll see people taking profits, much like people did with Bitcoin when the spot ETF was approved. So everyone's kind of so excited about these earnings. They're going to be amazing. The AI is going to be mentioned, all the hype. And so my guess is what we'll see is those stocks afterwards sell off, but then money will be rotating around into the IWM. And so far pretty good. In fact, we got in just underneath 196, already at 199 and change today. But my guess is you're probably at least headed up to 211 to 212 right up here. So just some cool stuff. I mean, this is what I love to do with the markets, is just look at these disparities, what could happen, kind of factor out the probabilities of it, and then just do my best to try to make some money.
But you can kind of already see how it's going to play out because you've seen it over and over again.
Right, and that's where the history of doing this for over 20 years helps.
Yeah.
Is that I learned the hard way early on, and now I've learned so many times.
For the rest
you start to catch on. You never fully do, right? I'm still wrong plenty of times, but you start to realize the general trend of things.
Yeah, you hope you learn, right?
That's
you
right.
Got to learn from your mistakes.
Big time.
What about Tesla?
Now let's take a look at Tesla here. So Tesla's an interesting one. So this is one where we actually hit some big support on the charts back here, back here, back here, back here, and then we came into that same level. And then you can also take this low and look at that bounce off of that low. Same low here, you got that bounce there. And then the idea is that as it comes into that same level, you got two trend lines converging. We should get a bounce back here. So there's a big gap right here at around, let me see the price on that. It looks like around 207. So my guess is Tesla's still got some upside to fill this gap before it really runs out of steam. And again, so much bearishness on Tesla, and usually what happens, that's a short-term low. People get too bearish, and then you kind of have the backfill, back up move, and I think that's ultimately what's going to happen. So again, I don't know if that coincides with any positive narratives that start to emerge. I just think on a technical basis, we'll probably head back up.
All right, so if we get news Wednesday of no more rate hikes and then rate cut on its way, what's the typical market response to that?
Yeah, so the market is the probability is that we won't see a rate cut. They're going to pause. They're going to continue their pause. And the real kicker is going to be in their statement. What do they guide us to in terms of how many cuts this year? So the previous times they've said like 3, and then they've kind of tried to walk it back even to like 2, because I think they're worried about how vertical the markets have gone. Like new all-time highs every single day. It can be inflationary. Because again, you look at your 401k and you're like, oh my goodness, wow, I just made another 10% on my few $100,000 that I've saved, or 100,000.
Yeah.
I guess I can go out and spend a little bit more money, which then creates this demand supply imbalance, right? More demand comes in, pushing prices up. And so again, it's just one of those things where the Fed usually likes to kind of keep things down. They don't want to create a bubble. I would argue they did by printing as much money as they did, but
yeah.
That
it's a little confusing.
They understand the outcome is ultimately a collapse. And so I do think that they will probably be a little bit more hawkish on Wednesday, trying to keep the market expectations at 2 to 3. Right now, the markets are at 6 rate cuts this year still. So you're still talking about 6 rate cuts. That's what the market expects. The Fed has guided to 3. Where is it? Where is it kind of meeting in the middle here? That's going to be the kicker. Yeah. That's what we have to find out.
Such a discrepancy.
It is. It's a very, very unusual discrepancy to see such a big range. I mean, 6 to 3 rate cuts is massive for 1 year, the difference there.
Yeah. Okay, Bitcoin, because boy, is it up.
Yep.
And Bitcoin obviously doesn't really ever stop, so it continues over the weekend. I believe it was, the last trading the close Thursday, it was, I thought it was down. Yeah. But it's been a few days.
No, it had a beautiful move on Friday, then kind of paused Saturday and Sunday, and then we're seeing continuation today. Let's bring up that chart right now. So if we take a look at this, right? So we had that top, which was the ETF top right here, right? The spot ETF approval came all the way down, kind of kissed this support level right down here. And then notice this trend line, this longer term trend line is such an interesting one for me because so many of the cryptos have this type of trend line where they broke key support and now they're coming back to retrace to that level. Now, as a technician, what you do here is you have to say, okay, we broke below it. Now we're back into it, but we're not above this level yet. So this 43 to 44,000 level is super, super important. It has to get above there and stay above there. As long as it's into it, the path of least resistance is still to the downside. But if it can get above, let's say 44 and stay right up here for a couple days, then it can start to head back to these highs right up here. So again, as a technician, I'm watching this level like a hawk, this trend line, to see how it reacts over the next couple days. It'll be interesting to see if it's at that point when the Fed announces on Wednesday, because then that'll cause, usually the Fed announcements cause a move in Bitcoin even, along with the market. So right now we're into resistance, but as a technician, you're watching, does it get rejected? That's the most likely probable outcome right now. But if it can't and it can get above, then you start talking about moving back to those highs.
Okay. Lastly, if we can touch on gold. I know you're bullish on gold. You follow it closely. And then tomorrow we have Lobo Tigre, who will be on because he works with gold and uranium and guides people in investing that.
People love talking about uranium and stuff too, so that'll be a lot of fun. So looking at gold here, we continue. We are having an up day, which makes sense. We saw the dollar had fallen, which usually the gold chart will move up. We're still underneath this key level though, right? So we still have all of this area here. So the key for me is, if my thesis is what it is, and it is bullish, I need to see us get above this level and stay here for multiple days. Kind of like what we were talking about on Bitcoin, right? So this is resistance, so you have to respect that it'll get rejected. But if it can get above here and just stay for a couple days, it starts to kind of generate further momentum to the upside. You'll see more and more shorts kind of get scared and more bulls come on board. So still this 2080, 2075 level is really the level to go by. I just continue to kind of default back to the idea that, when you see markets at all-time highs, when it's risk on is usually the worst for gold. Usually gold goes down when it's risk on. When people are buying risk, gold goes down to the downside. The fact that it's so close here, so close to these all-time highs, even in a market like this. I mean, just imagine we get a run-of-your-mill 10% correction in the stock market. That will probably create enough fear to get this thing going. And again, 10% after how much we're up. I think from the October 2022 lows, the Nasdaq's up 65%. So I mean, it's gone nuts.
Astronomical. Yeah. Wow. All right, Gareth, thank you very much. Appreciate it. And remember, you can always watch Gareth every weekday morning before the opening bell on his show, The Game Plan, that airs at 9 a.m. right here on the Verified Investing YouTube channel. Thank you so much for watching. That does it for us on Trading the Close on this Monday. I'm Toni Valliere. We'll see you back here tomorrow.